Good evening, ledges. Now, so many people have sent me messages saying, can we look back over some past trades of yours to get more examples of the types of setups you trade? That in tonight's workshop, I wanted to discuss a past trade I took. It was in BTC, and it was actually in July. Now, I'm not a fan of going back over past trades because it's not easy for you to get in the headspace of exactly how you felt at the time. So I really want you to see the trades I'm taking during EFL, not trades from fucking weeks or months ago. But that aside, I was having a look back at my journal, and this was a very good example of a trade that's got a lot of teaching points. And obviously it helped that it was in BTC, because I'm quite sure that that's all you guys are actually interested in. Now, I don't normally trade July, as I've said before. Ever since I told you one year I had so many students tell me it was their best month ever, I keep an eye on it if I'm around. And of course, in the back of my mind, I've never forgotten that my consistent profitability in the market actually started in a July 2007 to be exact. But like I say, I'm often not around in July, and even if I am, I don't turn up every day like I do every other month. So it's the luck of the draw whether I catch something. But I picked this trade to discuss because it was a very good example of something that I realised I mentioned when I was editing the afternoon session for the first live day, which is now on the website. And it was said so quickly that we really need to revisit it so you understand how important it was. And this trade that I'm going to show you is also a good example of one way to trade a daily bias, just in case we don't see another example like it in the month that you're with me, and the importance of thinking about acting at areas where other traders are often forced to make decisions. That's very important to how I trade. And also, this trade is a good example of taking the easy move. Now, I'm going to use market replay for this, for the simple reason that it will make everything much easier to understand. So let's take this back. There. And we'll put that on a weekly to start out. Now, the first thing that I do when I look at a chart is I take a top-down approach. So I look at the weekly, then I look at the daily, then I look at the hourly, all for context, to try and get an understanding of where the market has been and where it wants to go. And I always have a market map for each market that I trade. And by a market map, I mean, again, going through these three time frames, weekly, daily and hourly, and looking for price action to suggest to me which way the market is likely to go. And then I'll map out the key levels. So let's do that together as this chart looked at the time. So here we are on the weekly. We had a bullish inside week in play. So the market was trading within the range of the prior week. Note this last high pre-break on the weekly that we had reacted in front of. Obviously, no prizes for being close, but it's reacted strongly from there. When I was looking at this chart at the time, the next thing that I marked out was key support, which was this range low here. Now, we'd closed below it in the prior week and then immediately ramped up back above it, and that obviously was supporting the bullish theme in the short term. And then finally, I was aware of this, which is on the weekly time frame still, the last low pre-break, and this was the nearest reference point to market at the time. So with that done, dropping down to the daily, it looked like this. Now, already you'll probably notice the interplay around levels. For example, when we SFP'd this huge low here and we put in this spike candle, we traded back to the last low pre-break on the weekly, and then we reacted from there. But what I was aware of at this point, and what you want to be aware of, is that we've made a swing high and then we have made a higher swing low. And as a result of that, if we go ahead and make a higher high traders will likely puke any shorts they've got and initiate longs. Structure like this level here becomes what I will refer to as a forcing point. So my first port of call here in a situation like this is, can I see a good level that I could try and short if we break out from here, anticipating that traders could well get trapped? And on this time frame, you can see this level here. And that's your last low pre-break on the daily time frame. Now, it's obviously the last low pre-break before the market broke right down through this area, but it's also more than that. If you look across and you follow it with your eye to the left, you'll see it's been respected from both sides of the market, from buyers and sellers historically, and you can track it back with your eye. But you can see over here it's the low from the 5th of March, then near enough the 17th and 19th of April, and then here you can see on the 30th of April price broke the level a little, wicked off it, and then once broken here it was near enough the high of day on the 2nd of May. So the market had been reacting to that level. If you go back further and you really zoom out, have a look over here and you'll see again right at that price point resistance all the way over here from late 2021. So that level was of interest to me. What I'm looking to do is look for the market to just pop through a key resistance area and then short at the first level above. Because if traders are going to get trapped, they're going to get trapped as they're buying through this area. So let's now drop down to the hourly and again have a look what it looked like. Now, could we frame a trade around that? Yes, we could, and we'll do it just using, of course, the Trading View tool, but you could put a limit offer to sell there, use a stop above the thrust candle, and then use a target of the FTA, which is a return to the last high that's made if and when we reach that level. It would look like that at the current time. Now, I didn't put that order in because the R was already just below 1 without accounting for spreads. I'm just showing you the kind of trade that you could take, but this wasn't the trade that I took. But let's just step forward and you can see again, it breaks, it runs right into that level. Does it give two shits about whether I can make the R work for me? No, of course it fucking doesn't. It goes straight down and it trades into the highs that it's broken out of. So again, you can see the aggressive move up, stops get run, shorts puke, longs initiate. It's a forcing point on the higher time frame. Traders are making a decision there. They've seen the higher lows, they've seen it break out, and it runs into trouble at the last low pre-break, and we get an immediate pullback to the level and then through it. You wouldn't want to be a buyer here, in case anyone's wondering, what about buying a break and retest of this level? Because you can see on the higher time frame that longs may well have been caught here and they could be trapped. So you want to stand out of the way of that. Now, let's put that behind us for now, because by the close of this day, let's step forward until the close. Things get very interesting, and you now have a bearish daily bias to come into the next session with, and that daily bias looks like that. So you've got a shooting star, longs are potentially trapped at the high, and there's every opportunity for this to move lower. And this is one of the reasons I wanted to mention this particular trade. In the afternoon of the first live session, and again, I'd like you to go back and watch the recording just to remind yourself of this point, even if you've already seen it. There is a real, almost throwaway comment that I make. And as I was re-watching it, I thought, fuck me, I hope they pay attention there, because I gave you something key and I covered it for literally 40 seconds. So I said, if you get a shooting star, always keep your eye on the high of the day before, as it's a very good entry into a short. And I literally just said that, and then I moved straight on to the next thing. So Where is the high of the day before the shooting star? It's right there. And you can see how close that comes to the weekly last low pre-break. So it's there that you'll expect the market to gravitate back towards, and it's there that down on the hourly you're going to look for a potential short. Again, it's a forcing point, because any traders that have bought the breakout and are now trapped offside will try and get out if the market pulls back to where they got in from. If you think back to my Euro GBP example, when I bought the break and retest of a level, I realised I was trapped and I was immediately on the offer trying to get out of it. So we come down to the hourly, and it looks like this. So again, remind yourself of the fact that you've got the level here, which is the high of the day prior to the shooting star, and then you've got the weekly level just beyond it. So you've got a lot of confluence in that zone to try and get short. Now, the low of the shooting star, if we go back to the daily time frame, and that's here, is another forcing point. Bearish daily price action like that will force retail into the market if it starts to break the lows. Now, don't get me wrong, I have actually taught shooting stars as a daily bias over the years and suggested when you get one from a good level, you should look for shorts, but you have to trade these right or you will get caught on them. And I'm going to show you how I traded this that might be a little bit different to what you would expect. People almost always trade these in the same way. I used to trade it as retail commonly trade it, which is just short through the low with a stop beyond the high. And sometimes that works well, but it's all about context. So people that know my material might look at this and think, okay, right, well, you've got a shooting star, I can understand it's off a good level, you're surely going to run this all the way down to at least this swing low and maybe even the one beneath it. But what I want you to look at closely here, and again this is context, note that just beneath this daily shooting star, you've got the huge weekly level, which is the range lows that we've marked out. This is probably the single most important level on the weekly chart, and as a result you don't want to gamble with it. So you'd have to be super careful if the market breaks the low of the shooting star, knowing that it might not have a lot further to go. And I was very aware of that coming into this. So it was my play to take the easy trade, which is look for a pullback to the high of the day prior to the shooting star and take it down to one tick beneath the low of the shooting star where all other retail will start entering the market. So let's come back to the hourly again and have a look at this. So this is the trigger time frame. So we know right where we expect the market to turn from, and we know the next forcing point on the downside. Let's refine our exact entry point. You can see that the high of the day prior was here, but the last low pre-break is that candle there. Why is that the true last low pre-break? Because it's the last swing low. Some of you might think it's that low there. We're really splitting hairs. I mean, they're literally fucking on top of each other. And when you've got a very strong level like this that traders could be trapped from, you don't want to be trying to refine it to the absolute perfect little point for the sake of a few ticks, or you could miss the fucking thing. It's more important to actually get in the trade. So that was the area that I was looking to get in. It looks very much, when you scrunch the chart up, like that's not naked. But if you hover over the low here, and then you hover over the high of this pullback candle, you will see, at least on the chart that I'm using, that it is naked. And as long as it's naked, so it hasn't been retested in a subsequent candle post break, which is this one, it's absolutely fine for me to go ahead and trade it. Now, what about the stop on a trade like that? Well, what have I taught you so far? You can put your stop above the thrust candle. Let's just change this a little bit. It will give you an entry there and stop there for a potential 4.58R. Now, that stop will look super tight to some of you, all that matters to me is whether my stop is out of the way of structure, which it is. Even if you were to look at the very high end of the range here on the weekly, you're still just beyond it. But what about if you weren't comfortable having a stop that tight? If you weren't, and sometimes I'm not, then I will go back to the next bit of structure that price has broken through with another thrust candle. And if you follow it back with your eye here, you will see these lows here that we broke down through early Wednesday morning. So you could put your stop there. Now you really are well out of the way. That still give you a 1.57R, which is great. But, again, at the risk of repeating myself, I'm not bothered about having a tight stop if I feel I'm out of the way of structure. If I feel I'm not, I'm going to go with a wider stop. I don't have fixed stops. Sometimes you will see me come in with a tight stop. Sometimes you will see me come in with a wider stop. Sometimes you will see me say, like I did with the Bitcoin trade that I called last week, that I don't know where I want my stop, and therefore I've got to look at the price action and see if it begins to reverse off the level. So I'm not going to do the exact same thing every single time. It will be dependent on the unique situation. Now, let's say this happens a lot and you feel like the market structure says put your stop here, but you're thinking that could easily get picked off in a volatile market like BTC, so I would really feel safer with a stop up there. Stick with what you feel secure doing, but then track the outcome of the other scenario, which is putting your stop here, alongside it. And that way you'll start to build two equity curves out, and you can see, once you've got a decent amount of data, the strikes and R ratios of both and how they perform. Okay, that's the kind of work that I've put in over the years and will still continue to put in. So it's about taking a trade, doing what you think is right in the moment, and then thinking about what else could I have done. And I actually track a lot of different management approaches for the trades that I take. It doesn't take long to do at all, because you just enter your trade into your journal and then you can quickly look at the outcome. What happened if I didn't move my stop at all? Total passive management. What happened if I used the absolute tightest possible stop of the very first thrust that I felt super uncomfortable with? What happens if I move my stop when it's halfway to target to break even, and then just let the trade run with no management? All of these things, you can have an idea, you can track it. So there's the entry and stop. And again, I decided to use the low of the shooting star as my target. Now again, some people that have seen my material won't really understand that and think, why would I get out there? But there is two reasons. The first is, as I've said, I know other traders will likely blindly short through that low, and I want to get out as they're getting in and use them essentially as my liquidity. It's like the children's game Hot Potato. The music's playing, you're passing the potato round the circle. What you're trying to do here is just take it from one kid and pass it to the next kid and pray you're not holding the fucker when the music stops. In the game of trading, it's a little different, because it's like you have a line of sight to the person in control of the music once you understand the charts, and you know when it's high probability they're going to press the fucking button, the music's going to stop, and someone's going to get stitched up. So you can get adept at reading that over time. But again, the second reason I wanted to get out through that very low is not just because I know a lot of retail are going to be getting in, but because I was concerned that there wasn't a lot further to go before we run into this huge weekly. And remember, price doesn't have to go down and hit that weekly. It can get near to it and move away. So really, as we start to get close and we know other traders are likely going to be coming in for a short, you want to think about taking an exit, getting sidelined, and then waiting to see what happens. Many times I will get out at an area like this and then see what happens. And if we got a clean breakdown and then close on the daily time frame lower, then I would potentially trade the retest of the shooting star low, which would be this level. But what I'm trying to do here is take the very easy play from the prior day high down to the low where everyone else is coming in, then wait and see, is everybody else right? So let's just step forward. This is what happens. And that's exactly what you want to see. Acceleration straight up into your level. And by the way, that was the price action back in the day that if I'd seen it, I'd have thought, shit, man, I can't sell that. Cancel the order quickly. So the next candle is that, and then it's that. No stop movement at all on that trade. I did see it occur. It was the middle of the night. We go back to what I've said about things just fucking firing off at all times of the day and night. That was filling me around about 2 a.m. and I was watching it, and then I'm filled by about 4 a.m. approximately. Now, what if you were aiming for a little lower? What if some of you had looked at this and thought, what about that low? That's closer to the weekly, and there's some support there. You could have done. I mean, I didn't, but you could have done. Again, I wanted to get out as I thought everybody would be getting in. But if you had put your bid one tick beneath here and then you see this, what do? I would personally want to get out. If I feel that I could be trapped, I am trying to get out straight away. I'm not fucking about. The rest is history. It goes up from here. And look at the next day. It's made a new high and then reacted from there and closed lower. At that point, it looks super bearish. What I was looking for then was to see, can we break this low and this weekly level here? And if so, I'm going to look to get in on the rounded retest with space. And I was fully prepared to do that. And if we step forward, you will see that it does come down. It wicks off of that weekly, comes back here with an immediate retest, and again just goes sideways, and then it's up to a new high from here. So if you're not careful, you can get caught. But I was certainly looking for the short here. The daily looked very, very bearish, but it has to break the lows of the shooting stars. It had to break that weekly because it was always going to be a potential problem. And once it breaks that, yes, then you can look for the rounded retest with space. You must understand the significance of that weekly around 56,500. It's the big low of the range. So, not a long session tonight, but I wanted to walk you through that example as to how I trade a typical bias, because I think it's important for you to understand that not all daily biases are going to lead to huge runners, but you can still use them to frame very high probability trades. Now buckle up this week, ledges. One of the things I want to do this week is talk through mapping a lot of markets in real time, because someone left me some feedback. Angela, it was very much appreciated, and she said, when we cover charts often on your live day, you go through what you're interested in, but you don't spend a lot of time explaining why you're not interested in things. And I thought that was a really great point. You know, I'll often just say, I'm looking at this, I'm looking at that, and if I don't mention something, well, then I don't see anything. But what Angela was asking was, well, why don't you see anything? What about that chart makes you not interested in it? So we'll do a session on that this week. And then we've got the big finale. That's where I'm going to show you how to create a proper trading plan. How to transition from your trading plan into a flow chart for fast forecasting, and then the process of how trades go into the journal, the types of analysis we can do on those trades in the journal, and how we can hold proper performance reviews that mean that you can just keep leveling up in your trading. So it is going to get intense. Get ready.